Good day, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for Tuesday. It's November 7th, 2023. The time right now, 04:48 p.m. Central Time, where I'm at. I'm on the East Coast, and it's 3:48 Chicago time. We're about 12 minutes away from wrapping everything up in the markets. Now, the stock market made a beautiful comeback, but I'd be a bit cautious up here. You're starting to get up to the Bollinger Band area, and that could prove to be a problem. Notice how the metal markets all got thrown back as the dollar had a rally, but nothing that I would call super strong, 30 points, but all the currencies fell against it. We're still looking at grain markets that are acting weak as can be, not trying to do much of anything. On the energy markets, reports came out today that are predicting next year China's growth will not make 5%, and with that, it just tanked all of this. Good news over the weekend in the sense for the reduction in production of Saudi and Russian oil, but not enough to overcome this part of the market, a real problem in the marketplace of looking at the market and saying, uh-oh, if they're going to slow down, you really think you can just make that up with India and a couple of other countries? What if they slow down? That is what's hurting the market right now. So when we take a look over here at the weekly chart of the S&P, the E-mini, you can see how you're coming up now to the red line again. Be careful here. You're approaching resistance once again, right up to the 18-week average of closes. That's what this red line is. It should have its first real resistance at that number. Could it just go through it and keep going into year end? Of course it could, but generally you run into your resistance at those numbers. As we pull back in, you can see that you're already in a resistance area right through here. When you just look at a regular bar chart as to what the market has done, it's a heck of a rally. This and the NASDAQ have had the best 2-week rally they have in a very long period of time. Certainly got to be the best of the year. And it's a heck of a neat rally. The question is, what do you do for an encore in it? When we look at the swing line study, you can see you've got higher lows, higher highs. So a warning sign that you might have to consolidate this would be taking out right here. Take out these lows right in that area, and I got a problem in the market. And that low, by the way, is 43.64 and a quarter. When we take a look at what's happening here in terms of moving averages, well, if you take that out, first support is back all the way back here at the 100-day and then the 18-day average of closes, but it would break the trade pattern for a little bit here. The market has rallied almost straight up from October 7th, and it hasn't looked back at all. You're nowhere near the upper Bollinger Band, but can you get there? Of course. And if you do, you're looking at a market that might want to have resistance right up all the way here into the 44.60 zone. When we take a look at the momentum, this is another reason I'm concerned. You're overbought. You're not even trying to embed at this point. You have a long way to do that. That's why it's either it picks up and runs or the market's going to have itself a problem right away, right now. As we move over to the NASDAQ, and I hope you appreciate I'm out of town. That's the reason I'm not in my studio. So I'm doing the best I can, working remote, going on different computers to pick up all this and get this done for all of you. As you and I take a look, you can see a lower low. The market bottomed out against 200-day average, but now you're back up to the old nemesis of this market, the 100-day average, since it's above the market, up to the upper Bollinger Band. Do not lose sight. You have just come from 14,136 and you are up 1,000 points in this market. That is not a small amount of gain. It's one of the best gains of the year, and the market is vulnerable to see a pullback at any time. I think a signal for you that you might get a pullback when you're least expecting it is having an outside day up in the Dow that rallied right again into the 100-day average of closes to the Bollinger Band overbought market, outside day up. If you've taken my outside day course, you know that the one thing you cannot afford to do for the next 48 hours, if you're going to not have a market that wants to give you a signal that it wants to end this one leg up at this point, is taking out today's low. That should not be violated. In the Russell, the same type of action to a degree. Now, the Russell's weaker, obviously, than the other markets. It's been carried along with them. It has gotten a nice rally because this is the one most sensitive to interest rate declines. You're looking at a 10-year yield right now around 4.57, no longer at the 5.05%. It's almost a half a point decline, and that is very, very good for a market like this. But that doesn't mean it runs forever to the moon. Could it? Of course it could. I have no picture here that is bearish, but I just as well don't have one that's bullish. I have a market that broke its downtrend, but it hasn't entered a full-fledged uptrend. It could, but it's not there. In the 10-year notes, for my type of thinking, when you hit a Bollinger Band and you're overbought, the pros come out. And that's what I think is going on here. At the end of these videos, you will see my slow stochastics, my enhanced slow stochastics advertisement. If you want to learn how to work with them, I have a 14 or 15 chapter course that includes this charting software with it. It includes 2 weeks access to my paid subscriber videos. The value of just the charting software, the subscriptions to my morning video, and we even give you the written, is worth the price of the course in itself. And I mean that literally. What you're paying for the course, you would pay more for just that. So I think you'll find that it's well worth the money, and we're not talking you're breaking the bank here. It's just over $100, and you get to really learn something that will stick, I think, with you. If not, well, you get another point of view in the market at the very least. In the 10-year note, I'd be very cautious here. The market could at any point need to consolidate. It's come off a nice low, but it's overbought. I'm not enamored with buying markets overbought. In the 5-year, it's the same thing. Look how you're up to the Bollinger Band. You're in an uptrend, but you're overbought. If it keeps going, fine. I am not telling anyone to go short. I am saying I think it's time to take money off the table on the long side. There's a very big difference. In the dollar index, what are you really doing? If you pay attention, you're caught between the upper Bollinger Band, right through here. See where my cursor is? All through these numbers. And the lower band you just hit, got up and came right back, and you're turning away from it. That's what I think you're doing. This market is now entering a stage where it has to determine the next substantial move in the dollar. Is it a move back down towards 100, or is it a move back up towards the 109, 110 area? It's got to determine what that's going to be, and I think it's begun that process. And obviously, if it's doing that, the flip-flop will be very true in the euro. It is overbought. It hit the upper Bollinger Band. This is where the market should have its real resistance point. In the British pound, like so many other currencies, when the Bank of England did nothing on interest rates, the market came alive. Now, it has tried an upside breakout, as you can see. It hasn't succeeded with it yet to close a certain way, and it didn't do it. This was just a test of the upper Bollinger Band, and now if it pulls back to support, it should go to the 18-day average, and from there, if it works out of an overbought condition, it might even become a buy signal. I wait and see what it's going to do. In in the micro November Bitcoin, not euro, micro November Bitcoin, I have clients on my other updates long, the morning subscriber video, market's acting very good. I think you're going to go to the upper Bollinger Band if and when, and I want to make this clear, if and when the SEC allows these ETFs to trade off spot instead of futures. Number two, if you lose the embedded reading, but it closing back underneath 79, I'm wrong. Okay, I would want at that point to say, okay, let's take a fresh look if you get under 79 and see what it can do. But until then, I still like the long side of this market. Next up, the Brent versus WTI oil. Could it be going back to 438, the 18-day average of closes? Yeah, the differential could. When that happens, it means that WTI is picking up strength relative to the Brent. And as you can see, you got smashed in the Brent today. Now you are oversold. The market might be wanting to head down here to the 80.57 level, which I believe is the 100-day average of closes. And between that and the Bollinger Bands, just sitting here in these low areas now, I'd be very, very careful here. In other words, this break to me is saying, okay, in the 81.40 to 80.57 level, I think you're going to find big-time support. In December crude for the WTI, I wouldn't push this market any longer. I'm looking at the moving average. I'm looking at an oversold condition. If it embeds, what's embedding? Embedding is when the slow stochastic study right through here starts giving us all the numbers that both numbers are staying underneath 20. And we're not there. You got a 24. If I come over here though, both numbers under 20, next day, right here. And then the very next one will be under there. So you've now embedded, which tells me that hard rallies are sales, but nothing under a Bollinger Band number 1 and into the bigger support of that moving average. We then take a look at the next project here, which is the heating oil. And as I've told traders over and over, I thought the market was going to pull back because of tax consequences at this time of the year. It's what it typically does. It hasn't been tradable. The market has had either a lower low and a higher high, or a higher high and now a lower low. It just cleared the Bollinger Band in a major moving average, but it got itself oversold. There's no bargain to do anything in that market. And last, in the nat gas, I think there's just so much nat gas around that rallies in this market over time have to be sold. Resistance back up in this area. I'm still looking at this market from the short side on good rallies, not on breaks in any manner. So with that, I want you to take a look at how we're looking at the enhanced Bollinger Bands. You hear me talk about them. Learn them yourselves. You're your own best weapon. I'm just a guide through this forest. You have a good day.